Can you refinance your student loans more than once? That's actually a more important question than you think, because you could save thousands or even tens of thousands of dollars if you know when and why and how to refinance your student loans more than one time. So what is refinancing? Let's start with that. Refinancing is taking a loan with an existing interest rate where you apply to a new lender and you find a lower rate, and so you decide to have that new lender pay off the old lender so that you can get either a lower interest rate, a better monthly payment, or both. Now, refinancing is something that if you have something like a mortgage or a business, that can be really complicated. You need to get the asset appraised, you might need to pay closing costs. It's a little bit of a hassle. But with student loan refinancing, it's actually the opposite. Instead of having to pay money to do a student loan refinancing, through Student Loan Planner, you actually get paid to do a student loan refinancing because you get cashback bonuses in most cases from our website. And that's really a big deal because it makes it so that not only is it easier to do a student loan refinancing, it's actually more rewarding from a cash perspective too, because you get paid to do it and usually obviously get a lower interest rate as well. By the way, if you want to know more just about what refinancing is, I would suggest watching this video so that you can learn more from our channel. So that's what refinancing is. Now, second, can you refinance more than once? How can you figure out if you can? Well, the simple answer is you can always do it so long as you find another lender that's willing to give you a better deal. In fact, you could also refinance with a lender that's willing to give you a worse deal, but I don't know why anyone would do that. So in terms of refinancing to a lender for a lower interest rate, all you need to do is just find at least one lender that will give you a lower interest rate, even the same interest rate in theory, and you could refinance with them. That's pretty much it. And in fact, if you think about refinancing again, the reality is when you refinance for the first time, that was basically the worst credit profile of you, most likely, that a lender would ever see. Meaning that, say you started off with $200,000 of student loans and $100,000 of income, your debt-to-income ratio is 2 to 1. You paid off that loan a little bit, maybe say down to 150, while you got raises at work, so now you're maybe making 120, and now your debt-to-income ratio is really attractive. It's actually fallen quite a lot because your income went up and your debt went down. There's a real case to be made that a lender might want to give you a better deal because of that. So let's discuss the pros and the cons. The pros are, through a student loan planner at least, you might get a significant cash bonus of $1,000 or more. That's something that's really attractive, we know, to a lot of people. We did a survey of over 3,000 of our readers, and we found that about 80% of them said that they would refinance a student loan, again, for a $1,000 cash bonus at the same interest rate. So clearly people really like these cashback bonus rewards that we offer, and ours are the best on the internet. Those are at studentloanplanner.com/refi, and we'll put that in the details of the video. Now, there's the biggest pro of refinancing a student loan, again, is getting a lower interest rate or a better, more manageable monthly payment. So pretend that you have a 20-year loan and you pay down a lot of the loan, and now you can cut your interest rate by 0.5%. If your loan is, say, $100,000, that might save you a few $1,000s or a couple $1,000s to lock in that lower interest rate. Sometimes when people have made big prepayments, they can shorten the length of their loan from a 20-year loan to maybe a 10-year or a 7-year, and if they paid off a lot of the loan, the payment might actually not be that much higher, because if you're finding a lower interest rate and you've already paid off a lot of the loan, that new loan is amortized according to whatever the new term length of the loan is. So that's something called the student loan refinancing ladder. That's a sort of a topic that we coined. And the idea is a lot of people will start off with a 20 or 15-year term, pay a lot of it down, refinance to a 7 or a 10-year fixed, pay a lot of it down, and then refinance to a 5-year variable where the interest rate's like 1.5 to 2.5%. So almost all the money at that point is going towards principal instead of the interest. Now, what are the cons? The pros are you're saving a lot of money in most cases. What are the cons? There's really not a lot of cons, with the exception of you have a slight minor impact on your credit score every time you refinance a student loan, but that impact is temporary, and it's similar to opening up a credit card account, and it's only generally a 5 to 10 point impact. So if you are looking at buying a house within a month of refinancing your student loan, maybe you should hold off and lock in the mortgage first. Otherwise, though, there's really no good reason why you wouldn't apply to refinance your private student loans another time to see what kind of rates you could get. The other con, I suppose, is even if it only takes a couple minutes to apply to a place, it might still take up mental energy or time that you could spend doing something else. That said, for most people, that time is going to be well worth the limited amount of time that you spend on an hourly basis. What are some signs that you should refinance your student loans again? If you're hearing a lot of things in the economy about people locking in lower interest rates in their mortgage, or getting a great deal on their mortgage, or getting exceptional financing on their RV, that would be a good time to refinance your student loans another time. Whenever you're hearing riskier purchases like boats or RVs or just riskier corporate debt, whenever you're hearing people get good rates on that, that's a good indication that there's a risk-loving environment in the economy, which means that refinancing companies and lenders are going to want to give you a really good deal because there's so much capital that needs to be put to work. And that's really what's going on in 2021, at least, is at the beginning part of the year at least, we've got fairly low inflation, a appetite for a lot of debt with any yield at all that investors want to purchase, and we have all this student loan debt that was issued at higher interest rates that needs to be refinanced. There's billions and billions of dollars actually in private student loans that need to be refinanced another time, but unfortunately people have a lot of inertia and they don't really react. So you should go ahead and try to refinance probably every 6 months to a year just to see if there's anything better out there. Who should refinance another time? If you got a loan at any point before March of 2020 and you haven't already applied to see if you could find a lower rate, you need to apply. If since March 2020 you pay down a significant amount of the balance, you need to apply. Because either one of those things could result in you getting a lower interest rate just because of how low rates are in general right now, or because you pay down a lot of the debt and you have a better debt to income ratio and a better credit risk profile where you need to apply. Next, how can you prepare to refinance your student loans another time? You don't really need to prepare that much. You simply need to have enough money in the bank so that you can take all of your monthly expenses, including your student loans, multiply by 6, and then have that amount of money sitting in cash just in case. Because we know that with private student loans, you don't get any payment and interest suspensions like federal student loan borrowers got. That's okay because I don't think this federal payment and interest freeze is ever going to happen again, knock on wood, unless we have another national emergency. That's unlikely, and so I think it would probably be best for most people that are going to pay their loans off to lock in a lower interest rate long term. It's fine if you wait until the end of the interest freeze period to do that. I think for some people that want to pay their loans off over 10 to 20 years, might not be a good idea to lock in all the ultra low rates that exist today just in case inflation starts to happen. But really, you don't really need to worry about preparing anything. You just simply need to apply and have enough cash savings where you don't have to stress about anything. Where can you apply to refinance another time or a second or third or fourth time? Go to studentloanplanner.com/refi. You'll see the link in the description below this video, and all you need to do to get another cash bonus is just find a lower rate at another company. You can use a new email address as well if you've already have an application with this company to make sure that you get tagged properly so that you get the cash bonus that's associated with our student loan planner deals. The place to do that, you just click on as many of the loan companies as you want to try to find a better rate. We suggest checking at least 3 places. Most people will check only 1 or 2, and that's not really enough if you want to try to find the lowest rate. And if you're refinancing a second, third, or fourth time, you want to cast a wide net because it's hard to predict who's going to have the best rate for you. Lastly, what should you know, but what do you need to know before refinancing your student loans? That's the subject of our next video, so check that out and let me know what you think.